what really is scary is going year after year after year with no idea which jobs are making money, which jobs are costing you money, and what you should be doing as far as forecasting. What's up, everyone? Welcome back to Midweek Modern Craftsman. I'm excited for this week. So, as I do many times, the catalyst for this conversation was based on a consulting call that I recently had about just being new in business, not understanding the ropes, having confidence in yourself, potentially some imposter syndrome, and what you can do from a business perspective to just run a profitable, sustainable, viable business. It's obviously easier said than done, but at the same time, I think that we often complicate things and we lack confidence because we just don't understand what's going on. And I know that I talk about this a lot. I just don't think it has to be that complicated. The bigger you get, the more complex your business is, the more employees you have. Yeah, it becomes a little bit more complicated, a little bit more convoluted. But realistically, the smaller you are, the easier it should be, and the more important it actually is, because you need to make sure that you are capturing all of your time, all your numbers. You have to be making sure that you're forecasting properly, and you have to make the necessary and proper decisions in order to make money. And I think what most of us struggle with is that we don't have any sort of reference point. We are uncertain of what our numbers look like, what we should be doing, what type of jobs, what type of client. And I want to try and walk through just some of the simple things that you can do as a business owner to understand your numbers and to understand the really the basis of your business. And again, this could be for a bigger company, this could be for a smaller company. I see a lot of young men and women who get so extremely overwhelmed with the thought of, I don't understand the numbers end of the business, and I want to try and simplify this as much as possible for you just to get going, to put one foot in front of the other and start understanding some of this. I am not a business savant. I do not have a $10 million business. I cannot speak to every system and every process, but I can help you really simplify business enough to understand it's working, it's not working, where do you currently stand, where do you want to be, and how do we create a path forward. So that's the goal for me today, is just to simplify things enough that if you are overwhelmed by the thought of looking at your tax returns, creating a profit and loss statement, that more than likely it's just an accountability issue that you're running into, that you are probably overwhelmed by the thought of what you don't know, and it scares you, and it shouldn't. Because what really is scary is going year after year after year with no idea as to if you're making money, which jobs are making money, which jobs are costing you money, and what you should be doing as far as forecasting for your business. So that's really the premise of the conversation today, based around a conversation that I had with a young guy who's new to this industry and just trying to get his bearing, trying to get his feet wet, trying to understand like what way is up in this world of remodeling and building and residential construction. So I'm going to think back to when I first started in business, and I wasn't running a business, I was just working. Jobs were coming in, I was getting leads, money was coming in, money was going out, and I figured as long as there was, 20 grand in the account, that everything was fine. I was supporting my lifestyle. I wish I had more. I wish I didn't have to worry. But it seemed to be trending towards I would get bigger jobs, I'd think they're more money, and all it did was require me to work more. The days got longer, the weeks got longer, the hours got more intense, and the account never really changed. Maybe I spent a little bit more money, but I wasn't really making more money. I was just working more and more money was coming in, but I wasn't gaining efficiency. My margins weren't improving. I was just working more. Looking at it now, I realized that I had no idea what it cost me as a business, for lack of a better term, to produce work. Subcontracted work, self-performed work, kitchen, bathroom, built-ins. I had no idea. I was just throwing an hourly rate out there, pricing jobs based on how long I thought it was going to take, what my materials were, what my markup was, and making it work, for lack of a better term. It was not really working. I didn't know which jobs were profitable, and I pretty much was just staying busier than I would like, working more for a return that did not seem to be enough. What I would recommend for all of you to get out of that cycle that I was in, or skip over that, or work your way out of that, is to get some clarity on your financials. You don't need crazy software. You don't need these perfect systems. You don't need a robust business back end. Just an understanding of what's going on underneath the hood of your business. So for me, one of the biggest things that I did was just understand what it cost me to put work in place. If you guys and girls do not have our Modern Craftsman labor burden calculator, great place to start. It will help you understand the cost of, if it's a laborer, if it's you, your business, your structure, but what it costs to put work into place. And that's going to do two things. It's going to make sure that you're capturing every cost that goes into putting 1 hour of work into place, but it's also going to dictate maybe what market you should be working in if it's impossible for you to actually capture that cost or sell work at that cost, if you need to be doing different jobs, if you need to be selling different work, or if you're just not profitable and something has to change, right? So it's going to help you understand the real cost of payroll burden, insurance, your trucks, your tools, your time, overhead, all those things that account for the cost of putting work in place. So if you think that your work is costing you, or hiring somebody is costing you $30 an hour, and it's $65, or even if it's $35, you're losing money right off the bat. And as you hire more people, this compounds, right? It's not just you eating a few hours here or there. You're literally paying to have work put in place. And this is something that I did wrong when I first started hiring employees, because I peeled back. I was depending on them to be making me money, now not getting my premium of a rate, and I wasn't actually charging enough for what they were costing me, and then they were over executing, and then there were mistakes because I was peeling back, and I was literally paying for jobs to get done, wondering why I was not making money. It was absolute torture, and that's where I think a lot of us get in trouble, is that we don't realize that we're not making money. We don't realize that we're losing money. We figure, hey, the guys are out there working. We got to be making money. If I'm not making money, we got to do more work. I got to put another van on the road. I just, that's the most logical step here. And that actually is one of the worst things that you could do. So what's the simplest way to do this? It is currently April 21st. That means your taxes were due about a week ago today. That means that you should have access to your tax returns. And if not, you should have access to all that information fairly shortly here. And that 2025 return is basically a report card on your business. And there's more possibly accurate ways to assess the business based on today or forecasting or projections, but tax return is an amazing place to start. It'll give you a general idea, and yeah, there's ways that you can manipulate that to pay less taxes this year, that year, whatever, possibly take that into consideration. But again, basis for this, start with your tax return this year, last year, whatever it is. It's going to tell you what you brought in, what you spent, what was actually left over, and did you actually make money? I know this is scary, and I know a lot of us don't want to look at this, and the reason is because we understand that we probably didn't make money. Or the other thing is, oh yeah, I made $80,000 this year. I made $100,000 this year. I made $200,000 this year. Are you accounting for the time that you worked? If you made, $200,000 and you worked 40 hours a week, great. If you made $200,000 and you worked 80 hours a week, not so great. You're essentially making $100,000 while just running yourself into the ground. So make sure that you're taking all of that into consideration while taking a peek at those tax returns. After you take a look at that tax return, you understand, again, revenue, cost of the goods sold, what your overhead was, what your profitability was, and you can look up formulas for all of that stuff. It's super easy to analyze your tax return when you have all of that information there. To understand the health of your business, just take an hour, take 2 hours, look at it, understand what all of it means. If you don't know what something means, look it up, ask somebody, go on to some sort of AI platform and ask them to help you understand what it means. Just get familiar with all of the terms of your tax return, everything that's on there, and understand how each number affects the next. It's very logical, the way that your tax return works. If you look at it the way that the accountant looks at it, your bookkeeper looks at it, there's multiple lines. It tells you what to do with that line and the above lines to figure out what the next one is. It's very logical when you understand what each term means, to understand what they're doing to get to your gross profit, to figure out what they are going to tax you on at the end of the year. And again, this makes a little bit different if you're an LLC, if you're a corporation, if you're S Corp, all those things. But at the end of the day, you're trying to look at what your profit is, and then they're trying to figure out what you pay taxes on, and then you can figure out your net profit. At that point, you can start figuring out what works for you for a percentage perspective for profitability. When you're small, there's certain aspects of that you have to take into consideration where, hey, I'm supporting a lifestyle, I'm paying for certain things through my business, but should that be a full concession on behalf of your business or behalf of your earnings? That depends on your situation, your company structure, all of those things. But again, tax return, an amazing place to start to understand profitability. Once you understand profitability, you can start looking at your work for that year, right? The amount of revenue that you brought in, subcontractors, self-performed, products that you purchased, cost of goods sold as an entire number. And you can start figuring out different buckets that can be allocated towards, right? Kitchens, bathrooms, additions, basements, whatever it is, start understanding how much of your revenue is made up of these different type of jobs. At that point, you can start breaking this down, and you need more information than what's in your tax return at this point, but you can start understanding, even just looking at what your estimates and what your projections were for these jobs, right? If you had $100,000 worth of revenue in the year and you paid a certain amount for subs, you paid a certain amount for materials, you paid a certain amount for labor, salaries, overhead were in there, and you can start figuring, hey, well, I spent 12 weeks on this basement, I spent 6 weeks on this kitchen. You can start understanding what these jobs required from a resource perspective. And you can start understanding what the profitability of these jobs are. What made you money? Which ones were just filling up the schedule? Which made you more money? Which possibly required more time? You can look at, hey, I spent 8 weeks on this kitchen. That means that I should have charged this much. This is how much overhead I needed to capture. These are the costs that went into that job, and you can now look at, hey, this is what I actually should have charged for that job based on a combination of information from your tax returns, from your estimates, from your budgeting, from your costing spreadsheet, looking at your overhead and everything else, and say, hey, I was on this job for 6 weeks. This is what I should have been able to capture from an overhead, from a labor perspective, and this is actually what I thought it was going to be. So I made money there, I lost money there, right? If you had a job that took you 10 weeks, and on paper it's like, well, yeah, I should have brought in $100,000 in those 10 weeks, and you look at the estimate that you sent out and all of the invoices for work performed, and it only accounted for 8 weeks worth of work, you can understand that something went wrong with that job. Now you start figuring out what went wrong. Were expectations not aligned? Were there mistakes? Was it a scheduling issue? Was there rework? Did I just not properly estimate how long this was going to take? And then you can start assessing the overall big picture. Is this the case with every bathroom that I do? Is this the case with every basement remodel that we do? You can look at, hey, on these kitchens, they're taking 12 weeks. When I look at my estimate that I'm putting forward, I'm assuming that they're going to take 4 months, 16 weeks. We're actually getting done them early, and these are our most profitable jobs. So from an overhead perspective, we're capturing all of this excessive overhead. It's increasing. Our profit margins are going up. We're making more money than we anticipated. And then you look in the bathrooms, and it's like every bathroom we're putting in for 3 weeks worth of work, and they're taking us 6 weeks because of downtime, scheduling, staging, only being able to put one person in the room at a time. And you start understanding very high level from a combination of your estimates, your costing and your budget tracking for the job, and your tax returns, which jobs make the most sense for you. And again, this is not a perfect science. You don't need to calculate this to the penny, although you could do that. But if you just look at tax returns as a whole and say, hey, there's 52 weeks in a year, this is what needs to happen each week, this is what needs to happen each day, look at what your estimates were, look at what was actually put in place for those jobs, and compare what's happening, you can get a very good indication of what jobs are making you money, what jobs aren't making you money, and why, right? That's the big thing. Are the jobs that are not making you money because you're just not estimating them properly? Is it just a coincidence that you had a bunch of reworks and redos and issues on the same type of job? Or is it that these type of jobs generally come along with those reworks, those redos, those issues, and you need to find a way to capture that within your burden, your inefficiency, your slag for the job, whatever that may be? It's going to give you an indication of what you need to do to adjust that, or just say, you know what, those jobs don't make sense for us anymore. We don't make money on them. This happens every time. If we've raised the price $10,000 to cover that, people are going to laugh at us. They're going to walk away. So let's focus on the jobs that make us the most amount of money. When I first started in business, bathrooms made me money. The reason being that I was not subcontracting a ton of work. I was able to self-perform. I was one person. You couldn't fit two people in a bathroom, a lot of these bathrooms. So I was able to just plant myself there. I made my rate. I wasn't making a lot, but they made sense for me. As I grew and as I had full-time employee, two full-time employees, and a part-time employee, and I'm continuing to do the same bathrooms, even if I'm overlapping them or doing two at once, I start making less and less money, and I have to understand why. And for me, it was because these permanent bathrooms, the amount of coordination, the amount of the inefficiency and labor due to the size, the space, getting up to the space. Generally, they're on the second floor. Is there access? Are you setting up site protection in and every day? Is every trip to the truck an extra 200 yards to get out to the truck versus a kitchen that's on the first floor where you could fit 4 people in, where you have access to utilities in the basement underneath, right? Just efficiencies within these jobs. I realized that bathrooms were very difficult for me to make money on because even the simplest bathrooms with permits were consuming 3 weeks worth of my time at a minimum, and I was not able to charge for 3 weeks worth of time. So I was ending up paying my employees to perform jobs that I was not able to bill that much to my clients. So obviously I was bleeding money. I was bleeding money quickly, but I didn't realize this. I figured I just needed to throw another bathroom in the mix. I needed to overlap. I needed to be doing 2 at once. I needed to be doing 1.5 at once, whatever it was. And I wasn't just looking at the numbers and understanding that, hey, I'm at a point that bathrooms don't work for me. I could do it now, but I also have to understand that there's a lot of time in a bathroom that you cannot capture. And if I need to capture that time, it's probably going to put my price through the roof. And there's somebody who's going to do it for far less than me. So is the client willing to pay that? You have to figure that out. You have to figure out what your market is, and you're going to use all of these tools to do that. It's not as difficult as this needs to be. I know that it can sound overwhelming, but it really does not need to be that overwhelming. If you have 12 people on your staff, yeah, it's going to become more difficult for many reasons. You're going to have to understand how to forecast jobs. You're going to have to understand how to forecast cash flow. You're going to have to understand that on a much deeper level, what is required every hour of every day of every week of every month for you to not only cover your overhead, but make sure that jobs are running efficiently and that you are meeting the margins that you need to without much room for error. It becomes more complicated. The good news is the bigger you are, the more that you grow. There's economies of scale. Costs go down for insurance. Costs go down for overhead. You are able to perform more work. You're able to squeak a little bit more burden in there. You can bury some numbers where you create a little bit of breathing room. But the smaller you are, it's good because it's more transparent. You can see what's working, what's not working. But there's less room for error because you just have less hours that you can bill for in a year. So you're depending on a lower volume of work to be able to sustain. So it's incredibly important for the smaller contractors to understand this just from an income perspective. You don't have much room for error, and that's why it's so critical for you to understand these numbers, but it's very simple for you to do that. It should not be that complicated. Again, pull up your tax return from this year, from last year. Go through it. Any term that you don't understand, look it up. Understand what it means. Understand the formula that goes into that number, right? What makes up total revenue? What makes up total expenses? What is the difference between net and gross? How are you determining margin? How is margin different than markup? All of these things, while it may seem overwhelming, are so easy. I could go online and I could look these things up in 2 seconds and get a basic understanding of what they mean and sit down with my tax return and understand what decision, what job made up everything. And again, you do not need to get into the weeds here. If you do $1 million worth of work, look at how many jobs you did in that year based on your tax return from January 1st through December 31st. Look at what jobs you were working and look at how much time you allocated to each job. Understand the cost that went into that job. Understand the overhead that was required for those jobs. And take a look at, like, was I actually staying afloat? Was I making money? Was I losing money? You don't need to get down to the penny here. You just need to understand that there's certain jobs that are not going to make you the money that other jobs do. So you have a couple of choices. Do you continue doing what you're doing because you're going to take everything and you're keeping the lights on and you want to grow? So you want to make sure that you have work for people who are on staff, even if it's not the type of work that you want to do. Is that the move? I don't know. It wasn't the move for me, and I don't recommend it for everyone. For me, it's always about, let's say 2025 is over, we're on to 2026. Your goal for 2026, don't worry about selling more. Worry about spending less. So if for 2026 or 2025 I had $1 million worth of sales, my goal for 2026 is also $1 million worth of sales. So I'm not going to have to increase everything that's required and the inputs and the resources that are required to grow my business to get more sales, right? Because a lot of times then your overhead goes up. But I want to remain at $1 million worth of sales, but I want my profit margins to go up by either reducing my expenses, creating better systems, creating efficiencies and workflows, potentially price shopping certain aspects of your overhead that you're paying for that you don't feel that you're using, or that you could reduce the overhead and get a comparable result. Are there systems, processes, softwares, tools, vehicles, shop expenses that you're paying for that you don't feel that you need, that are not adding to your business? Get rid of them. Are there better hires that maybe even cost more, but are going to be able to produce the same amount of work with less time, or more work with the same amount of time? Make the switch. Are there people on board that you're keeping on board because you don't have time to really direct them in the correct path and really meet their full potential, but you're just continuing to pay for them because you feel bad that, right, they're on board? Like, if that's the case, how are they helping your clients? How are they helping your business? How are they helping themselves? They're not. So find a new path forward. Either find a system to make them be more productive, or I'm not saying just fire people, but if they're contributing to your overhead and you're not structured for that overhead, or you don't have the type of work that it makes sense, or the growth isn't there with them, then you need to get rid of them. Do the same amount of work in 2026, sell the same amount of work, but have it cost you less money to produce that work. You immediately made more money without selling more work. Your overhead should go down, if anything, because the cost per dollar of work is going down. It's requiring you've created efficiencies within your business. You've reduced your overhead. You've made better hires. You've created better systems. You've focused on the jobs that make you more money and have less mistakes, less do-overs. You've created better expectations. You've managed these projects better, that it's costing you less money to produce work. Your profitability has now gone up. So what do you do for 2027? Maybe you're good where you are. Maybe you've made enough money now and the business is running from a profitability perspective. You've created free time in your life that now you get to do some things that you want to do. You get to spend some time with your children. You're good right here. Or maybe you want to make more money. Maybe you have loftier goals. Maybe you just enjoy growing the business. At this point, you are now ready to scale your business because you've started creating the basis, the infrastructure for your business. You've started creating the systems. Now you've reduced the cost per unit of work. You are now ready to take on more work because of your efficiencies. The goal would be to increase the volume of work, increase your sales while maintaining that same overhead. If the next year you go ahead and you put $200,000 more work in place, but it cost you $250,000, that was a foolish move on your behalf, unless the growth trajectory you won't recoup for 2-3 years down the road. But for me, in our business and how much money we're making, that's a huge risk and that's a big investment, right? So understand how to make more money with the same amount of resources, the same amount of tools. If it gets to a point where like now we're on the edge of, hey, we really need to bring somebody in, now you can analyze the cost of bringing that person in with regard to all aspects of your business. You can say, if we bring this person on, how much revenue do we need per employee or per new employee to offset that? Not only offset that, but make money on top of that. If you want to make, $250,000 more, how much money is it going to take? Is it going to cost you $100,000? Is it going to cost you $200,000? Is it going to cost you $225,000? Is it going to cost you $300,000? Bad move. Don't do it. Doesn't make sense. Figure out how to grow without having to spend more than that. And yeah, you have to invest money. You have to invest time. But if you understand the cost of growing your business, you will make a far better educated decision as to how to move forward or to not move forward or to scale back. But you cannot do that without understanding all of these aspects of your business. And again, it can be as simple as this conversation. It could be tens of thousands of dollars we're talking. You're a bigger business. It could be hundreds of thousands of dollars you're talking. You don't need to get to the dollar. You don't need to get to the penny, but you have to understand the implications of each decision in your business, and it starts high level. It starts going through your tax return, creating a profit and loss statement, creating cash flow calculators or spreadsheets, understanding what forecasting looks like, understanding how much work you need to put in place on a daily, weekly, monthly, yearly business to cover your overhead, understanding what adjustments need to be made if sales drop off and you're not going to be able to cover your overhead for the year. What needs to happen? You have cash reserves on hand. Is there a change within your business? Can you reduce your overhead? Can you create better efficiencies? Is there slag or wiggle room or fat that can be trimmed within your business? And this needs to be accounted for all the time. It can't just be once a year. It can't just be at year end. At a minimum, it should be quarterly. It could also be per job. It could be when you go to invoice. But you need to have a finger on the pulse of your business financials, understanding the health of the business constantly in order to make sure that your business is healthy, in order to make sure you understand what direction you need to go, what type of jobs you need to be focusing on, who you need to sell to, what your marketing efforts need to look like. But that all starts. You cannot answer any of those questions. You cannot create an SOP. You cannot answer, do I need to hire? You cannot answer, do I need to fire? Do we need to invest in equipment? Do we need to reduce overhead? Do we need to charge more? Do we need to look at other jobs? Do we need a different client base? Do we need to expand our market geographically? Do we need to move to new construction rather than renovations, remodeling? You cannot understand all of that until you start understanding what your financials look like. And then the more you understand, the more you can hone in on things, the more you can create a system and a formula to guarantee profitability within your business, assuming all attributes, all variables stay the same within business. And when they don't, what needs to happen to make sure that you are remaining on track? So what I would recommend for everyone listening to this, at a bare minimum, ask your accountant for your tax returns as soon as they have them. Sit down, go through it, understand what each term means, understand the formula and how it generates an answer for each term, understand what your year looked like from a profitability perspective, and then break that down per job. What types of jobs that you did, how long did they take, what should the overhead have been for all of them? Do you feel that you covered that? What was the profitability for those jobs? Which jobs made you more money? Which jobs were easier? Which jobs were less headache? Is it a job type? Is it a personality type? Is it because you're self-performing aspects of the trade? Understand which jobs make the most amount of money for you, which are the easiest, which create the best business, the best lifestyle for you, and move ahead from there. That's my suggestion. I want everyone to do that before next week. All kidding aside, do it. Let me know what your answers are. If you want to do that and then you want to hop on a consulting call to really assess it and dig into it and look at the numbers and figure out what you want to do, more than willing to do that for people. I've done that with a handful of people as well. As always, I appreciate everyone's interest, all the consulting calls. They are a really good basis for these conversations and get my wheels spinning as to how I can help more and more people, because if somebody's going through this, I guarantee you there's 20 more people that are just sitting tight, not saying anything, and worrying about this. So I appreciate everyone who does step up and who wants to better themselves, because you are in turn bettering you, you're bettering me, you're bettering this entire community. And as we all grow, as we become more well-educated, as we understand our numbers, as we properly capture those numbers and our prices go up and we understand why, and we're confident in why they're going up and why we can't perform work at the rate that we were doing last year, the industry raises as a whole. We all make a little bit more money. We all have a better lifestyle. We're not competing with those numbers that are just draining us and exhausting us of all of our mental health, our personal health, our financial health, and everything else. So I appreciate everyone who's doing that. Again, if you're interested, shoot me an email, tyler@trghomeconcepts.com. Another great resource for you, which you can get through the newsletter, you can get through the link tree in our Modern Craftsman podcast Instagram, is our Circle community. So a handful of members on there now. I enjoy getting on and seeing all of the questions people are digging into. And it could be anything. It could be how to deal with designers and selections and making sure that you are protecting yourself. It could be, hey, I created this quote. How does this look? Is this something that you would send to a client? It could be how you are dealing with acquiring spec lot homes. We have product questions on there, hiring, when you should hire. Should you hire a field employee? Should you hire a back end? Content marketing. It's just anything and everything that somebody in the community has a question about. You can post in there. You can get an answer from a dozen different people, 24 different people, Nick, myself. We also have office hours, one Friday per month, where if you're part of this community, you hop on for a live Q&A. I think they're 45 minutes or so, but anything that you want to talk about or you want to dig into live, Nick and I will hop on and we'll have a call with you. And you have free access to that. You have first access to all the courses. There's within that platform, if you're a member of the course, you can correspond and communicate with other people within there just to say, hey, these are my systems. This is what I'm using. It's a closed community, so there's a lot of information on there that we can't put out publicly based on projects, numbers, just information that for privacy's sake cannot go out online, cannot go out on the podcast. So it's a bit more involved. It's a bit more of a insider view of what happens in business. So if you're interested in that, go on the website. You can get it. You can go on our link tree in our Modern Craftsman pod. Newsletter is a great place. The show notes. If you really can't find it at that point, shoot me an email and I'll get it to you. But I hope to see all of you on there soon. Thanks for your time. Thanks for hanging around. Have a great week. I will catch up with all of you soon.